Hey folks, and welcome to the Pipnotic Symposium for the 13th of September 2020. Today I've been working a little bit on the currency strength GFX, and I've introduced a new feature which was once a part of the configuration. I'm just going to show you what it looks like. I mean, here, if you look here at the bottom of the chart, you can see that we have Euro lines and British pound line. And so actually I have three instances of the software running. I have my long-term configuration, medium-term, and my short-term. The long-term is a thick line, the short-term is the thin line. So what I'm doing here, I'm looking for the dominant trend. So I'm looking at the fat line, the thicker of the three lines, and this is giving me a directional bias. And then I'm using the thin line. I'm waiting for it to cross at supply or demand in order to get entries. Okay, and so this is telling us also when we're having a pullback, but we are not we're not changing the dominant trend, which is the thicker lines here. If we look at the configuration, you'll see that number one, I've moved some of the other settings into the core settings now that you can see here, and I've added this one here, which is display active currencies only. And so if this is set to true, which it is per default, it'll only show the two currencies that are visible on this chart, so the euro and the British pound. If you set that to false, it'll show everything. And the good thing about enabling this is that, as you were saying, Cameron, that when all of them are running all the time, it's very, very calculation intensive. Doing this will reduce about 80% of the overhead because we're only looking at two currencies. So we're only doing two iterations of all currencies and not 9. And so that really helps with the overhead. And it's just a really nice way to be able to assess what's going on with these currencies. And you can use it on any time frame, of course. And so if we let this load, you can see here that we have the British pound, which is stronger than the Japanese yen. But now here, bleeding edge, we can see that these are about to cross. The British pound is just about to cross the Japanese yen on the long-term trend. The medium term, this has already happened. And so you could use this as an indication that we want to start to sell, because the shorter and the medium term, they are leading indicators. And the thick lines, the long term, these are kind of the lagging indicators. They're showing us the overall, the slow developments of currency strength between these two currencies. And the cool thing about doing that is you can use the shorter time frame indicators to give us like a heads up of bleeding edge developments in these currencies. And you can see here that just around here that we had the British pound begin to turn up on all of these. You can see here, okay, and then price started to dump. So it's just a really nice way to run these through. And notice as well that when I drag a pair on the chart like this, then we have, when it loads, we have 1, 2, 3, 4, 5 seconds, and that is when they load. There's a small configuration that you're all aware of called the algo execution interval, and this is set to 5, which is 5 seconds, which tells the software to run the algorithm once every 5 seconds, because I don't want it to be running on every tick, because that would be very, very labor intensive. So this helps slow things down a little bit. And I don't need this stuff to update every second. I mean, I need it to update maybe once a minute. It doesn't really matter. But when you change time frames, the software will be invisible until that period has passed. So if you put it in about 5 or 10 seconds, I think you should be good to go. Anyway, I just wanted to introduce that. I have already updated the downloads, so you can jump into the downloads to grab that. If you have any questions, drop them in the message, and continue a good weekend. Thanks for watching.